A very good morning, ladies and gentlemen. I, Dr. Ruchika Yadav,
I, Dr. Shruti Nagar,
faculty members at National Insurance Academy, Pune, are your hosts for the inaugural ceremony of our annual flagship event, the Insurance Summit. We are highly delighted to welcome the chief guest, invited dignitaries, learned speakers, leaders, and distinguished guests from the industry, both India and abroad, members of media fraternity, colleagues from the Academy, and our dear students, to the 21st edition of this summit themed Product Innovation, Reimagining and Realigning. This year's theme captures the very pulse of transformation sweeping through the insurance industry. As digital ecosystems evolve, customer expectations rise, and risk landscapes shift, the need to innovate, realign, and reimagine our products has never been more crucial. Ladies and gentlemen, keeping this in mind, we at National Insurance Academy have endeavored to gather distinguished leaders from the insurance industry to share their insights on the summit theme today and explore how to redefine the future of the Indian insurance sector.
Without further ado, I would like to invite the distinguished speakers for the inaugural ceremony to kindly come forward and form the dais. Mr. Satyajit Tripathi, Member Distribution IRDAI. Ms. Girija Subramanian, CMD, the New India Assurance Company Limited. Mr. Sanjay Kedia, CEO, Marsh McLennan India, and President and CEO, Marsh India Insurance Brokers Private Limited. Mr. Ratnakar Patnaik, MD, LIC of India. Mr. B.C. Patnaik, Director, National Insurance Academy, Pune.
Thank you, sirs and madam. It is a long-standing tradition in our culture to light a lamp and offer prayers before starting any intellectual endeavor. In line with the custom, I request the dignitaries on the dais to kindly light the lamp and invoke the divine blessings for a successful and enlightening event.
Thank you so much. As we move forward, let us seek the divine blessings through a vandana, a prayer that expresses our gratitude and devotion to the greater forces that guide our lives. For this, I would like to invite my colleague, Veena Purohit, to present the invocation song.
मधुसूदना मनमोहना करुणाघना रे नारायणा रमा रमणा धावता श्रीहरी झडकरी बलसागर गोविंदा धावता श्रीहरी झडकरी बलसागर गोविंदा धावता श्रीहरी झडकरी बलसागर गोविंदा तुझिया चरणी सादर वंदन तुझिया चरणी सादर वंदन करितो परमानंदा करितो परमानंदा दे प्रसादा व्यंकटेशा जगताच्या आनंदा रे नारायणा रमा रमणा मधुसूदना मनमोहना मधुसूदना मनमोहना मधुसूदना मनमोहना करुणाघना रे नारायणा नारायणा नारायणा. Thank you.
Thank you, Veena, for the pleasing invocation song. With the lamp now lit and Vandana recited, let us commence the event with a renewed sense of purpose, unity, and positivity. Before we proceed, I invite the budding professionals studying in NIA's PGDM program to welcome the dignitaries on the dais by presenting a floral bouquet.
Thank you, dear students. Ladies and gentlemen, as we begin, I would like to introduce Mr. B.C. Patnaik, Director, National Insurance Academy, to all of you who will be presenting the welcome address. Mr. Patnaik took charge as Director of the Academy on 26 December 2024. Prior to this, he served as Member Life, IRDI, where he also oversaw the Departments of Health, Legal, Customer Grievances, and Communication. Before IRDI, Mr. Patnaik was Managing Director of LIC of India, handling critical portfolios such as personal, HRD, investments, bank assurance, underwriting, reinsurance, and inspection. He was instrumental in the success of LIC's IPO and served on the boards of LIC Nepal, LIC Credit Cards, LIC Mutual Fund Trustee Company, the National Stock Exchange, and India Bulls Housing Company. With rich operational experience across diverse geographies, Mr. Patnaik has always championed customer service, digital transformation, and human capacity building in insurance. With this brief introduction, I request him to come forward and present welcome address. Over to you, sir.
Thank you, Madam. Good morning. I heartily welcome all of you to the Insurance Summit 2025. We have the pleasure of having our esteemed chief guest, Sri Satyajit Tripathi, Member Distribution IIDI. Welcome you, sir. Esteemed Madam Girija Subramaniam, CMD, the New India Assurance Company Limited. Welcome you, Madam. Esteemed Mr. Sanjay Kedia, CEO of Mars McLaren India and President CEO of Mars India Insurance Brokers Private Limited. Welcome you. Esteemed Sri Ratnakar Patnaik, MD LICF India. Welcome you. And respected panel moderators, very distinguished names in the audience. Srinivasan sir, Madam Preeti Chandrasekhar, Sarabjit Singh. So welcome all of you and all the panel moderators and panel speakers, chair professors, principal, professors, chief administrator, heads of department from NIA, all respected dignitaries from the panel speakers, from the insurance industry, the large number of enthusiastic delegates representing the industry, and dear students of NIA. It is indeed a great honor and privilege for me and all of us to host the Insurance Summit 2025. For the last many years, it has provided a forum for the industry to come together and deliberate on matters of great importance. And the industry thereafter takes over for progressive and positive outcomes so as to make insurance more affordable, more acceptable, and make it available in all parts of India, both in physical and digital mode. Over the last 2 decades, insurance in India has grown massively and has been a great contributor in making India an economic powerhouse. The contributions, especially during COVID, will always be remembered by one and all for a long, long time. Today, India is on a distinctly visible path of continuing its economic growth story for the next 25 years. Already the fastest growing amongst G20 countries and powered by a forward-looking, educated, and digitally empowered youth brigade, plus an enabling ecosystem, economic growth appears to be a certainty. Insurance will continue to grow. The transition from a developing country to a developed country will open up multiple avenues of growth in all forms of insurance. In the last 25 years, insurance has grown from 20 times to 40 times in various lines of business. It is expected that from the present scenario, that is which is around 12 lakh crores of premium in the industry, it will grow by a minimum of 20 times in the next 25 years. The theme for the current year, product innovation, reimagining and realigning, will help us in understanding ourselves, our processes, our connectedness with the customers, also with our marketing force in a much better manner. During the last 10 years, I have been associated with the Insurance Summit in one form or the other, many times as a delegate, sometimes as a guest, sometimes as a panel speaker, and sometimes as a chief guest representing IDI. In all such occasions, I have tried to devote as much time as possible, and honestly, I have gained a lot. I can say with confidence that it would have been the same with others, and today it will be the same with all. Once again, I welcome you all from the core of my heart. Thank you very much.
Thank you so much, sir, for the warm and hearty welcome. Ladies and gentlemen, I now have the pleasure of introducing the accomplished guest for today, Mr. Ratnakar Patnaik, Managing Director, Life Insurance Corporation of India, who will share his thoughts on the evolving insurance landscape and deliver the opening remarks. Mr. Patnaik took charge as Managing Director of the Life Insurance Corporation of India on 1st June 2025. Prior to this elevation, he served as Executive Director, Investment Front Office and Chief Investment Officer, leading LIC's investment operations at the Central Office, Mumbai. Having joined the corporation in September 1990 as an Assistant Administrative Officer, Mr. Patnaik has held diverse leadership roles across 4 zones, including Marketing Manager, Branch in Charge, Senior Divisional Manager, and subsequently as Regional Manager. A postgraduate in Public Administration, Mr. Patnaik is a Fellow of the Insurance Institute of India and holds a Diploma in Health Insurance. Known for his strong belief in teamwork and his empathetic leadership style, he brings a rich blend of field, marketing, and investment experience to his role. With this brief introduction, I request him to kindly come forward and deliver the opening remarks.
Good morning to all of you. Most respected Director, NIA, Sri B.C. Patnaik sir, Sri Tripathi, Chief Guest of this meeting, Madam Girija Subramaniam, Sri Sanjay Kedia ji, other dignitaries, my senior LIC colleagues, my batchmates, and a special mention about the faculty of NIA. I had the good opportunity of having training in this great organization at least half a dozen times, and above all, Young India present here. Hearty welcome to all of you, and I'm really delighted for this first opportunity to be associated with the Insurance Summit. I have attended the C.D. Deshmukh Memorial Lecture a couple of times, but this is the first time I'm getting thanks to Patnaik sir and the team NIA for this opportunity given to me. And the topic is really interesting, and having put in 35 long years in LIC, many of the youngsters present here will be much younger to our experience in this corporation. So for your kind information, I have worked throughout these 35 years, mostly in conventional marketing. I could never get a chance to work in other verticals of marketing of Life Insurance Corporation of India. Having worked for last 3.5 decades, I just can't wish away from not crunching numbers. Because numbers are our weakness, and being in life insurance for so many years. And relevant to today's topic, I would like to mention few points which are available in public domain, but I would like to collate these few points and there is very good enhancement, improvement, insurance awareness in this country today. All said and done, thanks to different initiatives of the regulators, the insurance companies, and the other stakeholders. Today, insurance awareness is in a very good state. Secondly, even after 25 years of opening up the industry, the penetration levels of life insurance in this country continues to be below 3%. It's just hovering around 2.8 to 3.2 for last 5 to 6 years. There was a bulge around 2006 to 11. I analyzed further, maybe that was attributed to the tepid growth in GDP. Otherwise, our penetration continues to be sub 3. Whereas the penetration in some countries like South Africa, it's 9.2%, Singapore at 7.4%, Taiwan at 7.1%, even Japan is around 6.80%. And similarly, the density levels of life insurance, it is a very small amount, $70 is the insurance density, life insurance density in this country even today. We just don't feel like comparing with other developed countries. For United States, it is as high as around $9,000 US, and Switzerland $6,064. And the global average is around $850. So that way, miles to go. And one more point, particularly for the information of the students here, the protection gap in this country, life insurance protection gap, continues to be 80 plus. The last update, it is around 83% is the protection gap. And I was just going through the data. In last year, 2024-25, whatever death claims were settled in the industry, as well as LIC, my organization, nothing to be very happy about. The average death claim settled for the industry per policy last year was a pittance at 2.94 lakhs only. And coming to LIC, even lower, it is around 2.2 lakh rupees. So I may be excused for saying this, let God forbid, there is a death in a family, this amount will not be sufficient to complete the rituals after the deceased. And in last 6 years, I am taking a comparison from 2009 to 2025, because pre-COVID periods till 2025, you go to any socio-economic parameter, any business metrics, there is robust growth in many things. Just I'm quoting few examples. In last 6 years, it will be much more now, I'm comparing March 2025, gold prices have gone up by around 17.34 CAGR in last 6 years. Sensex has grown by 12.26%, Nifty is 12.46%, the mutual fund AUM has grown by 17.88%, the average AUM of mutual funds, and the SIP of mutual funds has grown around 22% in the last 6 years CAGR. As far as the ticket size of life insurance policies of LIC as well as the industry, for LIC it is just 6.5% in last 6 years. So I am driving home this point, there is enough scope, protection gap is huge, inadequately insured public, and there is lot of money in the market, awareness levels are at all-time high, so it is time we have to go. And I feel much younger being here today when I was seeing the people seated behind. The median age of this country is 29 years today. 50% of the Indian population is 29 or below. And the demographic advantage for a life insurance company, 29 years and below, they are all insurable, but only thing, we have to reach to them. And one more good information, 35% of the millennials today and 45% of the Gen X, they own life insurance to some extent. There is a shift, and this is the latest figures, 35% of millennials and 45% of Gen X have life insurance. And for the need of annuities and other products, as high as 9.5% of Indian population belong to the baby boomer generation or the silent generations. So there is real requirement for some good products for this segment of the population who belong to baby boomer generation or silent generation. So I would be just touching few points, the way forward. There is a call given by the regulator and is rightly supported by Government of India, insurance for all by 2047. I am speaking about life insurance. General insurance, of course, is there. Madam and other members will highlight that. And life insurance to all by 2047. And a recent IMF data says by 2047, the insurable population of India will be touching as high as 98 crores. Today, if my information is correct, the total policies in force of Life Insurance Corporation and private sector put together will be little more than 30 crores only. So 98 crores of insurable population by 2047, and there has been disruptive digital transformations in all insurance companies. And the person who belongs to an organization 70 years old, I was telling in a conference yesterday, in a summit yesterday, this elephant called LIC has started rebooting itself for the new need of the new set of aspirations to match the aspirations of the youngsters of this country. And my suggestions will be for how to the way forward for more insurance to bridge the protection gap will be training and awareness to our field force. I am speaking about my organization. As far as Life Insurance Corporation of this country is concerned, we are having around 15 lakh agents today. But I don't have any hesitation in admitting these people need further training to be well equipped to meet the needs of the market. We are working on that, and very soon, we are working fast on that in fact, and that has been our priority for last 6 months. From 1st April current year, training has been our focus, and we shall be taking the help of NIA also for this. Second, my suggestion will be M2M. Having worked in investment for 4 years, M2M, I mean millennials to millennials. We have started recruiting agents, young agents. Particularly, there is an initiative called Bima Sakhis, launched by Honorable Prime Minister on 9th December last year. So this Bima Sakhis, a women-centric distribution force, which has started contributing more than 12% of the business within 1 year of their joining us. So that is also going to be a game changers for current year. Having worked in marketing for so many years, I can see the confidence of the young women in the agency force. We give some stipend to them, and it is conditional, and they have started doing well. One more thing, let us accept, as far as, again I'm telling, my organization is concerned, let us accept a fact, only more than 61% of our agents, they can sell only 5 or less products in a year. We have to see their profile, how much they can absorb and how much they can do. I would suggest something called a concept floated by my seniors, practiced by many of my seniors, including the Sri Patnaik and others. Product champions. There are few agents who are good in certain products. Let them do well, strengthening our strengths as far as these agents are concerned. And it was mentioned quite often than not, we should have simplified products. Actually is sitting here in front of me, but my question, I am really hesitated to find how a product can be simple as well as feature rich. This sounds like a dichotomy. Yeah, the process can be simplified, the underwriting can be simplified, but can the offerings be simple? Because if you need something more, it has to be some embedded values, some riders. So a product cannot be simple, plain vanilla, at the same time, it will be offering many features. So this is what one we have to address today, discuss today, and there will be around, suppose there are 25 companies and 20 products, each company, around 500 products in the market today in life insurance products. So for a customer, as long as there is symmetry in information, our agents, our distribution channel, at the other side, the customers, as long as there is symmetric information sharing or symmetry in information, that deals are not going to last long. And persistence is one thing which clearly shouts, look, unless the customer is aware of what he is doing or what he is signing on a dotted line, these policies don't run, many of the policies. But one interesting thing I was studying, the 5-year persistency for some life insurance policies which were taken during the COVID period are the highest. So that indicates that people, when buy insurance, they take a conscious call. Not all the people bought insurance during COVID times, but many might have. At least 10% of the purchasers might have taken the COVID, the Black Swan event. So those policies are running even after 5 years, and the persistence is good for these policies. So one more thing, as my organization is concerned, It's a public sector, people's money for people's welfare. That has been our objective. At the same time, spreading life insurance to the nook and corner of the country. At the same time, one more thing I would suggest, the agents. Out of 15 lakh agents, at least 10 to 11 lakh of agents have got a meaningful career with a decent income from this organization. 10 lakh families depend on it. So there are some debates going on whether we should reduce commission, whether we should increase the pricing, but my suggestion will be reduce fine. If need be, for the benefit of the customers, we can always contemplate, think, consider reducing the commission, but I'm not speaking the percentage-wise, the volume of commission an agent is getting, that should increase. We should teach them to sell big ticket policies, sell good policies, which will be persistent in times to come. So that will help them to have more income. At the same time, we can pass on better benefits to the customers. So with these few words, as far as LIC is concerned, we are going to encash the demographic shifts happening in this country. I will be touching when the panel discussion will be there, but I would like to conclude with one thing. Insured India is developed India. Bimit Bharat, Viksit Bharat. Insured India is going to be Viksit Bharat. With these few words, once again I thank NIA authorities for having given me this opportunity to speak here, and I wish this conference best of luck. Thank you.
Thank you, Mr. Patnaik, for your truly insightful and inspiring opening remarks. Ladies and gentlemen, to continue the morning's momentum, we have now a special address by a visionary who has been at the forefront of risk advisory and broking in India. I have the pleasure of introducing Mr. Sanjay Kedia, CEO Marsh McLennan India, and President and CEO, Marsh India Insurance Broker Private Limited. Mr. Kedia leads Marsh McLennan's operation in India and spearheads the growth and strategic direction of Marsh India Insurance Brokers. A founding member of Marsh India since its inception in November 2002, he played a pivotal role in building the organization in a nascent insurance broking environment. He holds an MBA from SP Jain Institute of Management and Research and has completed the Advanced Management Program at Harvard Business School. A recipient of Marsh Global Top Performer Award in 2006, Mr. Kedia earlier worked in project finance, advisory, debt syndication, and handling major assignment across power, telecom, road, and water sectors. A strong advocate for elevating the dialogue on risk, he is a frequent panelist at prominent risk consulting forums. With this brief introduction, I request him to kindly come forward and present the special address.
A very good morning to everyone. Director NI, Mr. Patnaik, MD LIC of India, Mr. Patnaik again, Ms. Subramaniam, Mr. Tripathi, member IRDI, Shri G. Srinivasanji, and fellow speakers, and most importantly, the young, the future of insurance, the future of our country, the students of NIA. It is wonderful to see that this event is taking place in Pune, and we have such a large gathering of our young, bright students of our insurance industry. the topic for today on product innovation is so apt, and I think nothing better that this particular subject is championed and taken forward by the students of our country as they step into the industry. I'm truly excited that getting an opportunity to speak to all of you on this subject. With my background of working for insurance broking, I have the privilege of supporting over 10,000 corporate clients in India. And with that experience of what a policyholder needs, and more so on a corporate side, I wanted to share some basics of what my experience has been in this journey of last 25 years, of what is needed by the policyholder. So I took the liberty of twitching the subject and saying product innovation, but focusing on building a policyholder-centric product innovation. So the first basic is on innovation. It has to be policyholder-centric. So I start with therefore the subject line, the product innovation is policyholder-centric. So we'll touch upon some frameworks, basics, and of course the insurance market learnings all intertwined as we discuss this very important subject, product innovation. We heard from both the speakers, and we all know Indian economy is the leading economy in the world now in terms of growth. So when it comes to Indian economy, one thing which symbolizes is growth. Why global investors wants to come to India? Growth. And what is unique about our insurance industry? It offers even higher growth than the economy. So Indian economy is offering 5 to 6% growth. Insurance market is offering between 10 to 15% depending on which segment you're looking at. There's not many businesses in the world, leave aside India, which offers and has offered consistently 10 to 15% growth compounded year after year for last few decades. So we are all blessed, and as students you are all blessed to be part of India and part of this economic story, and most importantly part of this insurance story. So we have tremendous growth ahead of us. When we talk about product innovation, it's important to look at the evolution of our insurance market from this lens. And I will pause at some of these big milestones, focusing on property insurance. We call it fire insurance in our country. And what has been the milestones? So we saw the opening of private sector insurance company coming in 2000, brokers coming in 2003. One major milestone, de-tariffing of pricing. Please note the word, it is of pricing, not of product innovation. So India had a very strange journey to de-tariffing, and probably the only country in the world which de-tariffed but did not de-tariff the product innovation. It only de-tariffed the pricing. So in 2008, the Indian insurance market on fire insurance was de-tariffed on pricing. So insurance companies were allowed to compete not on product innovation. The limits and deductibles were also kept constant. Means the customer did not have a choice to choose its own limits, own deductible. Of course, the coverage was constant. And what happened was not good for either the customer and not for the insurance company. The pricing fell almost on an average 85 to 90% of the premium for the same risk got wiped out for the entire industry as on a thumb rule. So if something was priced at 100 rupees, it became on an average 15 rupees. So with this kind of a price erosion to the entire market, it led to many other bad practices. The claims denial was considered justified. Claims delay was rampant. And of course, product innovation got further suffered. So with this singular competition purely on price and not on product innovation, we had much more problems compounded. And of course, when there's such a serious challenge on availability of premium to survive the industry came together and tried to put together a tariff in its own way in the form of introduction of IIB. That is nothing but an imposition of minimum pricing by reinsurers, happily taken by insurers, and the pricing was pegged just below the original tariff. And the prices shot up for a brief period of time. But to do a level of tariff back to the market, not imposed by the regulator, but imposed through reinsurers, innovation again suffered. Because you can have a constant price in the market when everybody is selling the same product. If 5 people are selling different products, you cannot have common pricing. So India has suffered, the insurance market in India has suffered on the property side. One, there was a competition only allowed only on pricing, and as a rebound, industry came together and imposed on the policyholders a minimum pricing through IIB, and which basically meant nobody was incentivized to do product innovation. So again, product innovation suffered. Something which media did not celebrate, industry did not celebrate, India introduced formally D-Tariff 2, that is D-tariffing on wording, was formally introduced by IRDAI in 2024. But nobody noticed, nobody celebrated, because everybody was focused on the price battle, which was introduced in the form of IIB. So in 2024, it was a major milestone. India formally introduced D-tariffing on product innovation on the fire insurance. It meant a customer can get the wording they need if the insurance company wants to give, limits and deductibles what they want to give. Not much innovation took place because all insurance companies were focused on coming together and imposing a minimum level of pricing. So I think that has kept the industry backward. You all as students will become buyers of insurance as corporate risk managers, will join reinsurance industry, will join insurance companies, and all of you have up to you that you take this conversation forward and relook Indian insurance market in the most forward-looking way. Let me give some data to you. I've had the privilege of being in either the Asia management or the Europe management for the entire Marsh, and had a chance to look at how markets behave from Australia to Japan to UK to this. And what I see singularly, these things are not present in any market which I'll be sharing you. These are some startling facts. India does not have, till recently, an all-risk product for some insureds below 100 crore. But if you go to any market across the globe, it is very common. All-risk product is a very basic thing. It is not something very innovative. An all-risk product for some insureds below 100 crore was systematically withheld and denied to the most deserving segment, which is below 100 crore sum insured. And those innovations got withheld because the entire market got focused on singularly one thing, price. And I think the solution for insurance companies also lies that they innovate. When you compete only on one parameter, the result is going to be southward, very, very badly. But if you have different products to compete on, hopefully the price will be held upwards. When you meet hundreds of policyholders, customers, corporates, they ask some of these very basic questions for which you don't have an answer. They will ask, why India has a strange regulation that only a handful of companies above 2,500 crores sum insured will be allowed a better coverage in the form of mega risk. Why we are not going to be allowed to buy true coverage? If my industry is power industry, my industry is pharma industry, why can't I have an industry specific wording which I can find in all other markets outside India? So I think the innovation space on the fire insurance particularly is humongous in terms of coverage, in terms of limits, in terms of business interruption insurance, in terms of the deductibles. Some of the thumb rules, when you look at the uninsured losses across the globe for the corporate world, as a thumb rule, 2/3 of losses comes from business interruption. but our availability of business interruption insurance is not much in the country. Not been sold, not been purchased enough, and even in being sold, the wordings are not good enough. 2, India continues to offer full sum insured policy, but the losses expected on full sum insured is not high. And does insurance industry has balance sheet to actually honor a full sum insured loss for a very large refinery or a power plant? The answer is no. But we give insurance on full sum insured basis, though our reinsurance base is on PML. So the whole insurance industry is exposed to getting wiped out. So some of these anomalies of past old world continues. Look at the co-insurance concept. That was good when there were only 4 government-owned insurance companies. All regulators denounce that counterparty risk carried by similar risk-bearing entities, like all insurance companies bear the same earthquake and flood risk, but they carry huge amount of counterparty exposure in terms of premium and claim settlement. And that is rising. That gives a systemic risk to the entire insurance market. So we deregulated many things, but some of the old architecture of tariff and delinking has not happened in the market. So be it in terms of full sum insured policy, be it in terms of stable insurance market. Now, what does a policyholder need? I will go down quickly on few points on the policyholder need and yep, page down. So how do we make a policyholder-centric innovative market? Very simple, few basics. Keep insurance market competitive and de-tariffed, both on wording and on pricing. If we don't keep the market de-tariffed, it takes away a fair pricing to the customer and it takes away product innovation. The biggest enemy of product innovation is some form of tariff coming back, and that is not good for the policyholder. And if it is not good for the policyholder, we will not be able to do all the things we talk about in any of the conference of building customer deficit, taking away on all things. So we need to collectively, all of us, need to push the tariff always away. Allowing competition both on price and coverage is what will get the product innovation. Claims experience is the heart and soul of why a policy is purchased. The track record of large claims settlements in India we have been tracking is only worsening year after year. But what is good in happening in the market? The introduction of cashless claims on health has been phenomenal. Cashless motor claim settlement is phenomenal. The idea is when a claim is settled quick, fast, and without dispute and without much challenges, it's a customer delight. The basics of, if you sort out just the claim experience in the policy, that's product innovation. We spend time on getting wording which doesn't honor a claim, that's not product innovation. What a policyholder wants is a seamless claim experience. We already touched upon the financial stability of insurance market, and I'll touch upon the risk-based solvency is a requirement of a de-tariff market. Why? If our solvency is linked to the premium, and premium has fallen because of competition, 80%, the solvency requirement falls by 80% if it is linked to the premium. But has the risk fallen by 80% to have a lesser solvency requirement? No. So we need to bring risk-based solvency. It is what obvious, and that is being delayed for so long. So it will assure the customers that we are all safe. And incentivizing risk management. I'll touch upon this. This is part of product innovation. Do we have enough structures in our policy which creates the right behavior for the policyholder to do risk management? And do we have right structure in the reinsurance arrangement which makes insurance company do the right risk management? So if I was to take a data on, say, starting with the insurance company, I looked at data of 30 to 40 markets globally which went for de-tariffing in the last 50 years. All of them had one common feature, that within first 5 years of de-tariffing, the reinsurers stopped supporting proportionate treaties altogether in the market. India, with so many long years of de-tariffing on pricing, the proportionate treaties are the norm. not an exception. So what it means is the first level of risk management, that is a true underwriting, doesn't take place by insurance companies. They go down to race to the bottom because they are getting commissions on getting the volume. They are not able to do the true risk. So unless the reinsurers force the insurance company to have a level of deductible in terms of excess of loss, they will need to do risk management. And look at our deductibles on the policy of large corporates. Few lakhs of rupees and such low number of days, it is one of the lowest deductibles in the world. It doesn't inspire risk management by the corporates. So both at the end insured and by the insurance company, adequate risk management is not in place. And deductible is not a bad thing. It is a necessary thing. As student of insurance, we learned the insured should have a skin in the game. And insured should behave as if he is not insured. And how do you induce this behavior? So as students of insurance, my hope lies on you that we go down to the basics of these things. Get the claim experience right, get the insured aligned, and the concept of an all-risk product should be very common, not an exception. And large mega policy should not be reserved for a handful of 10 corporates in the country. It is a right for every policyholder in the country to get the policy which they deserve. And if India is going to become from 5th largest to 4th largest and 4th largest to 3rd largest economy, India needs coverage, the right coverage for all the policyholders, for the industry in their work. And these all things are very much possible. And it doesn't require the most sophisticated language and complexity. Going back to the basics of right deductible, right limits, and right coverage, what is the underlying business. And all we can do it is make a claim experience smooth. If all these few basics are done, and the regulator helps keep the market competitive. I know insurance companies sometimes don't like the word competitive, but if you compete both on price and coverage, it will be good for everybody. But if you compete only on price, it is self-harm both to the policyholder and to the insurance company. So thank you all. I'm conscious of the time. I've conveyed a lot, but I think sticking back to the basics, and I have tremendous hope from this young and the future of our insurance industry that India will get ahead of rest of the market on these very basics. So with this, I pass on to the rest of the panelists. Thank you all.
Thank you so much, sir, for your thought-provoking address. Ladies and gentlemen, I now have the pleasure of introducing a leader who has exemplified vision and resilience in steering one of India's largest general insurers, Madam Girija Subramanian, Chairman cum Managing Director of the New India Assurance Company. Having started her career as a direct recruit officer in GIC Re in 1988, Madam holds over 37 years of experience in the insurance industry. A graduate in statistics from Mumbai University and a fellow of the Insurance Institute of India, Madam is also an associate of the Chartered Insurance Institute, London. She joined as CMD of Agriculture Insurance Company of India in September 2022 and as Chairman cum Managing Director of the New India Assurance Company in June 2024. Madam is on the board of several prestigious institutions including National Insurance Academy, Pune, India International Insurance, Singapore, Prestige Assurance Company, Nigeria, Institute of Insurance and Risk Management, Hyderabad, GIC Housing Finance, Health Insurance TPA, Bombay Chamber of Commerce and Industry, and a co-chair on the insurance section of SOCHAM. With this brief introduction, I request Madam to kindly come forward and present the keynote address.
A very good morning to everyone, and greetings to Mr. Patnaik, the Honorable Member Distribution, IRDA, Mr. Patnaik from LIC, and Mr. Kedia from Marsh, and the bigger dignitaries out there in the audience. A cross-section of, I think, the entire insurance industry is here, and my dear students. It's a privilege to be here today to speak on a subject that is both timely and transformative. The topic, product innovation, reimagining and realigning, is especially relevant to the non-life insurance industry in India, and this would definitely be one of the biggest pillars of ensuring insurance for all by 2047, which would be, the dream completed and a vision for which the IRDA and the government is working so hard on. Our sector has for long been perceived as traditional and rule-bound, with innovation often interpreted as minor adjustments to existing products, very much on the lines of what Mr. Kedia has just shared. However, we have now reached a stage where incremental changes are not enough, and the world around us has changed permanently. Our customers have new expectations, our distribution models have evolved, and the risks we are asked to protect have become more complex. So unless we fundamentally reimagine and realign the way our products deliver our services, we risk losing relevance in a rapidly changing environment. The Indian non-life insurance sector has achieved many milestones over the years. We have widened access, strengthened our balance sheets, and demonstrated remarkable resilience in the face of disasters and pandemics. Yet, when we look beyond the headline numbers, we must confront an uncomfortable truth. And large sections of our society remain underinsured or uninsured. In health insurance, the so-called missing middle continues to fall through the cracks. These are people who are not poor enough to be covered under government schemes, but are also not affluent enough to afford comprehensive private insurance. So we also have millions of small enterprises that face growing cyber risks but lack suitable protection. There are individuals who own vehicles, homes, and small businesses, but still view insurance as a one-time transaction rather than an ongoing relationship. For these reasons, innovation cannot remain an optional pursuit. It has to become the central pillar of our strategy. We need to close the protection gap, make insurance accessible, affordable, and meaningful for every Indian household and enterprise. This transformation cannot be limited to product design. It must also extend to how we think, how we use technology, how we distribute, and how we engage with our customers. Let me begin with the problem of the missing middle in health insurance. This segment includes nearly 400 million people, many of whom are informal workers or members of the lower middle class. The challenge is not only about affordability, but also about relevance. For years, we designed health insurance products that focused on hospitalization and indemnity-based reimbursement. They required medical tests, detailed proposal forms, and annual renewals. Such products do not match the needs of gig workers who probably want protection for outpatient care, daycare procedures, or income replacement during a short illness. Technology today gives us the ability to redesign products for this population. We can offer smaller, modular health covers delivered digitally. These can include hospital cash, benefits covers for specific diseases such as dengue or malaria, maternity-related protection, or even small fixed benefit plans priced at just a few dozen rupees per month. The personal accident policy offered on the IRCTC platform for railway passengers is an excellent example. Earlier, it was impossible to sell such low premium policies because the intermediary commissions and administrative costs made them unviable. Digital distribution has changed that equation completely. When products are sold electronically, there is no need for paper-based processes or intermediary commissions. What was once impossible due to cost constraints has now become feasible and scalable. This is what true disintermediation can achieve when combined with imagination. Embedded insurance represents another remarkable opportunity. When insurance is built into the purchase of another product or service, it becomes intuitive for the customer. The customer no longer needs to make a separate decision about buying insurance. It becomes a part of the overall experience, whether one is buying a smartphone, booking a travel, or taking a ride on a platform. Embedded insurance allows us to meet customers where they are and provides them with protection exactly when they need. For insurers, it opens up new partnerships with e-commerce companies, manufacturers, and fintech firms. It changes the mindset from seeing insurance as a standalone financial product to seeing it as an integrated service component within an ecosystem. Parametric insurance is yet another field where product innovation is reshaping possibilities. Unlike traditional indemnity products that depend on loss assessment, parametric covers are triggered by a measurable event such as rainfall level, wind speed, or even infection rates. The simplicity of the model is the greatest strength. There is no need for surveyors or lengthy claim investigations. Once the trigger is met, the payout is made automatically. This model reduces ambiguity, builds trust, and enables coverage even in regions that are difficult to access. The development of parametric pandemic resilience covers supported by reinsurers and global partners demonstrates how data and technology can make even catastrophic and systemic risks insurable. These products mark a shift in the insurer's role from being a reactive player to being a proactive enabler of resilience. As parametric and embedded insurance redefine accessibility, personalization is redefining relevance. In an era of one-size-fits-all in insurance is gradually ending, and customers now expect that their policies reflect their individual lifestyles and habits. Motor insurance that uses telematics devices to reward safe driving behavior is a well-known example. Similarly, wearable devices and health applications can support dynamic health policies where healthy habits are rewarded with lower premiums or extra benefits. Personalization, however, is not only about pricing. It extends to communication, service experience, and claims handling. With the help of artificial intelligence and behavioral analytics, we can now design products that evolve with the customer throughout their life. Insurance then becomes a relationship built on trust and mutual learning rather than a mere transaction. Another area that demands attention is cyber insurance for micro, small, and medium enterprises. Large corporations already consider cyber risk as part of their board-level strategy. But MSMEs are equally, if not more, vulnerable. They operate with limited IT infrastructure, but rely heavily on digital payments and cloud-based systems. The rise of digital transactions through UPI and online lending platforms has exposed small businesses to new types of risk. Unfortunately, most of them still lack suitable insurance protection. There is tremendous opportunity for the industry to design simple and modular cyber insurance products that cover data breaches, ransomware attacks, or business interruption. These products could be affordable, easy to buy, and supported by risk prevention services. For small businesses, the greatest value lies not only in financial compensation, but in quick recovery and continuity of operations. Insurers who can help them recover with gain lasting loyalty. So we must also focus on micro insurance and small coverage plans that serve the rural and informal sectors. The key challenge in the past has been scalability and sustainability. Today, digital ecosystems such as payment banks, government portals, and microfinance networks offer the reach we need. A 10,000 rupee crop cover, a 50,000 rupee house cover, or a 1 lakh rupee livestock cover may appear small, but at scale, these products have significant economic and social impact. They protect families against shocks and help maintain livelihoods. When insurers partner with digital payment systems, agri-tech firms, and cooperatives, the dream of universal risk protection becomes achievable. Environmental liability insurance is another area that must evolve rapidly, with growing emphasis on environmental, social, and governance standards. Companies are now being held accountable for the impact of their operations. Industrial accidents, waste management failures, and pollution events carry not only financial costs, but reputational ones as well. Innovative environmental liability covers can encourage businesses to adopt safer and more sustainable practices. Insurers can play an active role by combining coverage with advisory services and performance-linked incentives. In doing so, insurance becomes a tool for promoting responsible behavior and sustainable development. Surety bonds, which are widely used in international markets, are beginning to find their place in India. They can play a transformative role in infrastructure projects by replacing traditional bank guarantees. This will release capital for contractors and reduce their dependence on banking credit. The insurance sector has an opportunity to standardize and popularize these instruments, thereby supporting national infrastructure development and enhancing liquidity for small and medium contractors. Similarly, professional indemnity and directors and officers liability products must be broadened and modernized. The business environment today is far more complex than it was a decade ago. Risks related to data privacy, artificial intelligence, and environmental disclosures are increasing. Professionals and company directors face legal exposure on multiple fronts. Insurance policies need to cover these emerging areas clearly and efficiently. Equally important is the matter in which claims are being handled. Transparent and time-bound settlement will build credibility and confidence among corporate clients. While product innovation is essential, it cannot succeed without innovation in processes. The traditional structure of insurance companies divided into rigid silos such as underwriting, claims, marketing, and IT no longer serves us well. Real innovation demands collaboration across functions. It requires a culture where experimentation is encouraged and failure is viewed as a source of learning. Innovation should not remain the responsibility of one department. It must begin in the boardroom and flow through every level of the organization. Boards must consciously create space for new ideas and be willing to tolerate risks that accompany innovation. Senior management must empower cross-functional teams to test and refine ideas quickly. The regulatory sandbox framework introduced by the IRDAI provides an excellent opportunity to experiment safely. Companies should go beyond compliance and integrate innovation into their strategic objectives. Incentive structures should reward long-term customer value rather than short-term policy counts. Process re-engineering also requires full-scale digitization from underwriting to claims. Straight-through processing, artificial intelligence-based underwriting, and blockchain-based claim validation are not futuristic concepts anymore. They are operational necessities. When customers experience instant policy issuance, transparent claim status, and personalized communication, they feel the true impact of innovation. However, technology alone does not define innovation. True innovation begins with a change in mindset. It's about reimagining the very purpose of insurance. Our mission is not merely to sell protection, but to enable resilience. When a farmer receives immediate relief through a parametric crop cover, when a small business restarts operations after a cyber incident, or when a passenger's family receives support through a 1 rupee accident policy, we see innovation at work. These moments demonstrate the human value of insurance in its most meaningful form. As we look toward the future, collaboration will play a decisive role. Innovation flourishes when different perspectives meet. Partnerships between insurers and reinsurers, between insurers and technology companies, and between public and private sector can unlock tremendous value. The development of pandemic and climate-related covers in partnership with global reinsurers is a clear example of what can be achieved when expertise is shared. Collaborations with data analytic firms, academic institutions, and digital platforms can further enhance precision and scale. Reimagining and realigning also means making insurance inclusive. We must ensure that our products and services are designed for all segments of society. Language simplicity, accessible documentation, gender sensitivity, and effective grievance redressal mechanisms are vital for building trust. Innovation that excludes trust is not true innovation. In the years ahead, the Indian non-life insurance industry will not only be judged merely by its premium growth or market share, it will be judged by its imagination and its capacity to serve society's evolving needs. The companies that succeed will be those that view innovation as a continuous discipline rather than an occasional exercise. They will be data-driven, yet human-centric, technologically advanced, yet socially conscious. Let me end with a simple thought. Insurance is at its core a promise. It is a commitment to stand beside someone during their most difficult moments. Product innovation is the art of keeping that genuine promise meaningful in a world that never stops changing. When we reimagine our products, and realign our processes, and re-engineer our thinking, we do more than create new policies. We create new possibilities, and for individuals, for communities, and for our nation. The future of insurance lies not only in what we protect, but how we empower people to carry about their duties. Let us therefore innovate fearlessly, execute relentlessly, and serve purposefully. By doing so, we will not only strengthen our balance sheets, but also build a stronger and more resilient India, a future inclusive India, where there is insurance for all very soon. Thank you so much for your patience.
Thank you so much, ma'am, for an enriching and inspiring address. Ladies and gentlemen, with great pleasure and a profound sense of honor, let me introduce to you Mr. Satyajit Tripathi, who is the chief guest for today's summit. Mr. Tripathi is a member distribution at Insurance Regulatory and Development Authority of India. In his current role, he is significantly contributing in shaping the distribution landscape of the insurance sector, driving customer-centric reforms, expanding market reach, and enabling sectors' transition towards more accessible, digital, and inclusive future. Prior to the current role, he was the chairman cum managing director of United India Insurance Company from September 2021 to February 2024. A graduate of a College of Agriculture, Orissa University of Agriculture and Technology, Mr. Tripathi holds a postgraduate degree in management from Xavier's Institute of Management, Bhubaneswar. He started his career with the General Insurance Corporation of India in 1988 as a direct recruit officer, worked across East, North, and Western regions, and has traveled overseas extensively in matters relating to reinsurance. From 2002 to 2006, he served the Agriculture Insurance Company of India and later took charge as the Chief Investment Officer at GIC from 2015 to 2018. Today, we are privileged to have such an eminent personality with us. With this brief introduction, I request him to kindly come forward and present the presidential address.
Good morning, distinguished guests on the dais and in the audience, senior colleagues from the industry, faculty from NIA, and young students of NIA. Somehow I get a perfect vibe of the insurance industry in this room. Serious looking faces, sometimes bordering on boredom. That is typical of the industry, has made the vibe of this room perfect setting for a subject which deals about product innovation, reimagining and realigning. Coming from the regulator, I must add that there is a caveat. Let not your imagination run wild. With that, we start on a discussion basically about what is meant by product innovation, how do we reimagine. When we reimagine means already we have imagined certain things and we need to realign certain things. All of you are in the industry. You also must be watching what is happening overall in the financial sector, not only related to the insurance, but overall in the financial sector. There is rapid growth. There is rapid growth across the industry from regulation point of view, from various acts, including the DPDP Act, and the steps that are taken by other regulators also to attract fund and to increase the bandwidth of that particular sector. In that context, when we discuss about product innovation, the product innovation spreads across life, non-life, health. It's not limited to non-life alone. There are a number of issues across these three different areas which needs not only reimagining but further rethinking about the way we approach insurance, get the policies, market it, and service it. Now, let me start by setting the scenario. We stand at a critical juncture. We have a very large youthful population, rapid digital transformation, evolving risks such as climate change, cyber threats, pandemics, and a regulatory regime which is keen to ensure that insurance plays a central role in the inclusive and the sustainable growth when we march towards 2047. To realize both the national priorities and industry goals, we also must go beyond insurance penetration and make the sector as a whole relevant to the industry in a way that is sustainable, that is attractive to the people, and serve the regulatory intent and above all the national priorities. Now, why this context is so compelling? We are aiming as a nation to become as a developed nation by 2047. And from a narrow focus of selling traditional life, health, and motor covers to become an enabler for providing a broader overall resilience to the society, protect it, and by the same measure also help in their prosperity in the days ahead. Now, how the nature of risk is evolving over the past few decades. If you have simply watched the natural phenomenon that is happening across this country and globally, you would have seen the higher incidence of natural catastrophe, the rather lack of covers to cover such a large destruction across property, life, and assets overall, and the non-availability of wherewithal of the affected people to restore their livelihood to the pre-catastrophe phase. Even it was visible very much during the pandemics. People lost lives, the breadwinners lost their lives, and there was very little that could be done when you have not had your protection purchased from the life insurer or even let us say from the general insurer. Now when we say we need to innovate and release some products, the regulator has given you the use and file such products, but in all such matters, you have to see that at the end of the day, the regulatory intent behind such allowances are served. If that is not served and a way is found to see that we can work around the regulation, the regulator will be having concerns, definitely. And regulatory changes are not meant to be ad hoc changes. They are changes brought about with a lot of thought, lot of planning, and as I said earlier, with a regulatory intent for what it is meant. The regulator will always try to have a balanced view of the overall things, not only for the growth, sector's growth, but also to see that at the end of the spectrum, the policy holder is benefited. As Mr. Kedia also pointed out here, that at the end of the whole exercise, we need to see to what extent the policy holder benefits. When we find that that is not happening and the intent is somehow misunderstood or having misplaced priorities, the regulator will come into picture. Let me now come one by one to give the context in health insurance first. When we look at health insurance today, the real excitement lies not in what the products already offer, but in what the next generation of products will offer. Let me share a few innovations that we believe can redefine India's health insurance experience. And I am telling this after we have had lot of deliberations. We do have sessions with various insurtech companies at the regulatory office. We also do a lot of brainstorming sessions as to what is happening across, where the technology is driving us as far as product proposition and settlement process is concerned. In that context, let us first imagine a policy with dynamic premiums, where your premium automatically will reduce or increase every year based on your lifestyle data fetched from the wearables that you use. If you walk more, if your sleep pattern is not disturbed, you maintain your fitness scores, your weight is constantly at a reasonable level, you pay less. And with advancing age, if these parameters show further improvement, you need to pay further less on this matter. Whether a hospitalization arises or happens is a secondary matter. But if you have done the necessary actions to prevent many of the other unexpected issues, obviously the premium should reduce over the years. Do we think in that line? Do we think that there is a possibility that such a product can be developed in various modules over the years, 30 to 40, let us say? This has been your record. 40 onwards, this has been your record. How many times you have been hospitalized? If there is an accident or something, that's a separate matter. Second, we are definitely heading towards a time of real-time claim approvals. No paperwork, no waiting rooms, no TPA calls. You walk into a hospital, scan your QR code, and the insurer gives you instant approval using AI-based medical validation. Straight and simple. Treatment starts immediately because health should not wait for the files to move. This is basically the understanding that health payment of claims need not move in tandem with movement of files. If you have paid the premium over the years, when you are hospitalized, the treatment should be seamless, the payment should be seamless, and claim settlement hassle-free. The regulator will be working towards it and to see that a major cause of concern and major cause of policyholders' distress need to go. It may be a gradual process, but this will happen. I can assure you that. Third, there is a huge potential for personalized coverage modules. Instead of buying one big policy, imagine building your own cover, like what we call as Lego blocks. Mental health, maternity, dental, cancer prevention, or sports injury. All add-on modules priced on your specific life stages, your own risk profile, your own interest in pursuing various activities. Students, young professionals can pay only for what truly matters to them. Fourth, we expect to see very soon predictive health alerts. Your insurer uses anonymized medical and lifestyle data to warn you 6 to 12 months ahead before a health risk becomes a serious concern, whether it is diabetes, stress burnout, or cholesterol spikes, and even offers subsidized checkups or teleconsultations. In such cases, prevention becomes the new claim settlement. You keep alerting your policyholders to the risks and to the areas that he is getting into. Finally, the future could bring outcome-based insurance. When we say that, we mean today we pay for a treatment. Tomorrow we will pay for the results. For example, if you join a weight loss or diabetes reversal program, the insurer subsidizes it. And if your health indicators improve, your premiums drop instantly. Insurance and wellness become totally in one ecosystem. So insurance is not a single standout product. It encompasses wellness along with it with the help of the insurer. These ideas, which we have now started seeing with many startups and many other entrepreneurial people who are coming and showcasing us their things, are in due course going to come and be part of the insurance companies sooner than later. And they also reflect that health insurance is not a product you buy once a year, but it is a living, intelligent system that grows with you, protects you, and rewards you, and keeps you healthy. And for young people like you who are sitting backside, this is the most exciting time to shape the future. From health, let us now come to motor. Motor is also on the verge of a major transformation. Not the old repair and reimbursement model anymore. We are talking about innovations that could redefine how all of us experience mobility and safety in the coming decade. Let me share a few next-gen ideas that have started to take shape gradually. First, imagine the behavior-based premiums, as Madam has already alluded to. Your premium changes in real time, depending on how you drive. Smooth braking, steady speeds, no hard acceleration, your premium will drop automatically. Rash driving, inviting challans, the system nudges you with alerts and makes every driver responsible subsequently. And you will be rewarded for your good behavior on the road, for following traffic signals. It is easier said than done. There are some cities where the traffic signal has no meaning. But in due course, we have to inculcate such good driving sense in people. Whenever you see people driving suddenly getting into the highway in a high performance car, suddenly they feel that they must driving and they must test the engine's responsiveness and everything. The vehicles are made for certain things, for certain mobility. It is not to test your own driving capability or your own mindset to become a rally driver on a highway. It's not for that. Second, future motor policies definitely likely to include AI accident detection and instant cashless approvals. We have now seen a lot of motor cars on the road in Indian context which are ADAS level 2 adaptive. ADAS has gone to level 5. We are at ADAS level 2. We are not going beyond that. We are not prepared infrastructure-wise and otherwise, and from a driving sense of point, we are not developed to that extent. ADAS level 2 itself is very difficult for people to adjust. But these things will gradually seep into the policy. What kind of vehicle you are driving, how capable is that vehicle to detect the forthcoming accident, or how you are alert towards this response from the engine. The moment a collision happens, your vehicle sensors send data to the insurer. Within seconds, the AI verifies the impact, approves the claim, and dispatches a tow truck to repair the team. No long calls, no paperwork, no service. Insurance literally arrives before you call for help. It is linked. Your vehicle and its system and its software is linked to the insurance company. Any moment, if it is stolen or if it is met with an accident or anything, or you are stranded, the information is available real time at the insurance company. Third, we might see modular driving packs. Instead of a one-size policy, you choose packs like city driving. Only city driving, 60% of time, 40% on highway or in some areas. Long distance highway driving, you need a protection for that, that is different. A ride share cover, college campus protection, or even a special cover for weekend adventures. You have a 4x4 all-wheel drive car, which is designed for specific terrain driving. You need a special package. Take that. It is not meant for your city driving or city parking and certain other things. It will undergo different kind of mechanical failures, if at all it happens. You pay only for your actual lifestyle and your driving patterns. How do you drive? Now the fourth and another interesting part. The industry could launch soon predictive maintenance insurance. Using vehicle telemetry, insurers can warn you weeks before a major breakdown. You will be warned about a breakdown, that this part of your vehicle is worn out. Your brake pedals need replacement. Your clutch pedal is not up to mark. If you are driving automatic, that's a different issue. Then, are you expecting a battery failure, brake wear, tire risk, engine health? These are all possibilities and these are coming. If you are thinking that we will continue with the same age-old motor policies, give for this with some add-ons, those days will go. You act early by getting the predictive maintenance alerts. Your deductible will reduce. In totality, what is aimed at is prevention becomes part of your insurance experience. It's not that I will do everything. When the vehicle breaks down, the insurer will come. Fifth, and another most interesting part is the growth of EVs in India. Now, imagine that you have an EV and you have battery health coverage. That is the engine for the EV. Not just damage cover, this would include battery degradation prediction, charging pattern optimization, free fast charging credits, and guaranteed replacement at certain health levels. The battery is the new engine and insurance has to evolve for that future. That vehicle is different from the conventional vehicle. Let us accept that fact. It provides you mobility, but its engineering, its mechanics, and its driving dynamics are different. And its engine problems are different. Finally, the most exciting idea is an interesting thing. It is shared mobility coverage. What does it tell? Students often use multiple modes. They use bikes, they use car rentals, ride shares, metros. A future policy could insure you as a driver and a rider, both, across all modes, and not just one vehicle. If you drive, ride, rent, or share, it's all covered under one identity-based policy. In effect, it will give you a freedom of mobility policy. You want to drive, drive. You want to ride, ride. You want to share your mobility, you can share different packages, different modules in a single policy. Now, these innovations in two of the major areas, that is health and motor, it shows us a future where motor insurance also isn't about paperwork and premiums. It's about safety, intelligence, personalization, and seamless mobility. And young people who are there inside the room, they are the ones who will be shaping such products in the days ahead. The third and another important factor is with which the policy makers are also grappling, and a lot of time, lot of resources are devoted towards this. That is climate risk. Climate risks and parametric insurance are very closely related. Globally, parametric solutions are gaining traction and India too has begun to embrace them. In India, for example, the northeastern state of Nagaland has renewed a 3-year parametric policy covering floods, landslides and drought, with participation by state government, insurers and reinsurers. Climate risk covers the need tailored solutions, parametric triggers, index-based cover, government insurer collaboration and subsidies for vulnerable sections. As has been alluded to earlier by speakers, the protection gap is large and in advanced markets, without this gap being covered, the innovation, the gap will definitely widen in future. And product design must consider affordability, speed of payout, transparent triggers, and be aligned with development priorities, resilience and livelihoods. For India, this implies to meet the national ambition and regulatory goals, we must reimagine climate risk covers, move beyond the standard property, fire, flood covers to scalable parametric index covers, agricultural catastrophic insurance, urban flood covers, infrastructure resilience covers. We must realign them accessible to the large population, affordable, distributed through digital channels, and linked to national resilience programs. The fourth subject which I talked about earlier is cyber. Cyber insurance is emerging, though it is nascent. From a risk perspective, cyber threats are intensifying and India is not spared of this. In fact, it is ranked second in ransomware volume globally. In foreign jurisdictions, there is a huge global market. Solutions are more mature with cyber insurance embedded in corporate risk frameworks. Many jurisdictions pair cyber insurance with cyber risk advisory services, continuous monitoring, and integration with broader enterprise risk management. Now, what does this imply for product innovation in India? When you reimagine, a cyber risk products need to be accessible to the vast SME segment, this country, even digital savvy individuals, not just large corporates alone. They must reflect Indian threat landscape and within a mobile fast UPI digital payment supply chain and digital identity ecosystem, the threat perception is very high, and when you realign this, the product needs to be intelligent, affordable, simple, and possibly modular and distributed through various digital channels. Underwriting must leverage the data, monitoring tools, partnership with cybersecurity firms. And from regulatory and national perspective, as India digitalizes further, systemic cyber protection via insurance supports national digital resilience. Cyber insurance is a prime example of product innovation aligned with national priorities and evolving customer need. For the vast population of this country, when we are talking about insurance for all and in 2047, one of the key questions for India is, given the size of the population and significant coverage gaps in insurance, can package products help serve a huge proportion of the population? I believe that the answer is yes, but again, when the regulatory mind starts working, it will come with caveats. Large population with diverse needs and often low insurance penetration means the traditional high-touch, high-premium customized products exclude many. Package covers, which are simple accident covers plus wellness benefit, health cover, and teleconsultation, allow scale and cost efficiency. Embedded insurance, from the insurance offered seamlessly from the point of transaction, is growing. For India, embedded insurance offers a channel to reach vast underserved segments. we have talked mostly about non-life products, but I also strongly believe that life insurance products also need innovation. Let us look at it from two regulators' point of view. If you are having an NPS product overall, and you are looking at pension overall after the age of 60 or something, two regulators come into picture. Your accumulation phase under PFRDA, your distribution phase, the annuity phase under IRDAI. Have you separated both the funds and seen what is the return? If I put my money continuously over a period of time for 60 years, maybe whether it is equity index based or equity plus debt or debt alone, what is the rate of rate of return that I get up to 60? Once I hand it over to the annuity, what is the rate of return that I'm getting? It is hugely different. Sometimes some of the life products, even in par, non-par, if you look at them closely, there are products where the IRR is 0. Whether it will be questioned in course or not, or putting money over so many years, and at the end, when you buy the annuity, it is 60% is what goes to annuity and 40% is what is given. Now it is again going back to some 40, 20, 20 kind of breakdown. Will not a young person ask that question, that need I buy an annuity at this point? Now, who is attracting more funds then? Is the long-term product from the annuity point of view, though it should not be directly looked into the point of view of what is the rate of return, but it will come to question that whether this is justified. Then if we don't innovate the product to that extent and say that for the cost of giving you a guaranteed cash flow or guaranteed payment, I charge you this much over the years, the justification for that will come to be questioned by the person who is at the receiving end. If he simply puts a calculation over PPF and equity and says that I will manage my pension from this, can we say that from the point of view of IRR, simply from IRR point of view, is not justified? Though it is difficult, I'm not saying that is easy, it is easier said than done, but when you look into over a long period of payment of premiums and the annuity subsequently coming to that, and you say vis-a-vis what is the return that I have got, reforms that is coming in the pension sector also. So we must not close our eyes to what is happening to our long-term products, to what extent they are beneficial to the people who are interested in buying them, and what should be the combination for them. And as Mr. Patnaik told beforehand, 61st month persistency is at 48 to 49%. What does that mean? Are we saying that if you buy a 20-year policy, want to put money for 20 years, and after 5-6 years, find that 50% of people are gone? Need you pay a renewal commission for that? Or you should pay commission only when the persistence level is at X level? Why should I pay commission in the first year or in the second year? What the intermediary has done? I buy a life insurance policy for 20 years. I am paying digital, let us say after first year. My payments are digital. Almost all young people will be paying digitally. Need you pay commission to that extent? At the cost of the policy holder, the bottom line is policy holder first, shareholder next. And if the policy holder doesn't stand to benefit, it is his money which is going through, then for what purpose we devise and we innovate and we sell our products? Over a long-term period, if you look into the capital markets across financial products, you have now n number of products. Indians can invest overseas. Indians can invest elsewhere. You want to attract funds to your sector, wants to increase. The total AUM is now coming to something from investment point of view in the insurance industry is something close to now 75 lakh crores. 5-6 times bigger than the pension funds this point of time. In due course, they will catch up. If we don't rethink and realign our products to the growing demands, if we remain anchored to the same age-old policies that we have been selling and keep selling, that will not sell in the future. Don't sell. That is the stark reality. That is why from the regulatory point of view, we do see a lot of changes that are happening across various regulators, across various financial products, across the capital market. So many times you would have seen the SEBI alerting individuals regarding derivative markets. There is a reason. But these are emerging things on which we must remain alert to. When we talk of risk, we should always look behind also and to see that we haven't left anything on the trail that might come back to hurt me. Anyways, jokes apart, my sole point of alerting all of you is that you need to remain open to the challenges that is coming. It is not a time to sit back and be complacent. I started this discussion with saying that it is boring, but I can assure you that the industry will be very exciting in the days ahead. Thank you.
Thank you, sir, for your profound address. Ladies and gentlemen, as we come towards the end of the inaugural ceremony, we wish to present a token of our appreciation and gratitude in the form of a memento to the experts on the dais. For doing the honors, I request Mr. V. Balagopal, Chair Professor of Life Insurance at the Academy, to present the mementos to the esteemed guests.
Thank you, sir. As we are close to concluding the inaugural session of the summit, on behalf of the organizing committee, I would like to extend heartfelt gratitude to all our sponsors for their invaluable support. Titanium sponsor, Life Insurance Corporation of India. Platinum sponsors, the New India Assurance Company Limited and General Insurance Corporation of India. And silver sponsor, Agriculture Insurance Company of India Limited. Their sponsorship reflects their commitment to the advancement and innovation in insurance industry. We are proud to have you as partners and we look forward to continuing our collaboration in future. Before we close, I would like to request Dr. Shalini Tiwari, faculty member at NIA and co-coordinator of the summit, to come forward to express our gratitude to the esteemed dignitaries for the inaugural session.
Thank you, Shruti. It is often said, well begun is half done. Very well. So today, as you have experienced, ladies and gentlemen, the summit has started on a very high note, and thanks to the dignitaries on the dais. I extend a very hearty thanks and gratitude to all the dignitaries on the dais for sparing time from their busy schedule and providing us a great start. Respected dignitaries, your insightful address has given us excellent direction, and we have got the stage set for further deliberations during the 3 panel rounds. I would be highly obliged if you can keep on we can have your association further as summit unfolds. Thank you very much. A round of applause for the dignitaries on the dais. Thank you very much.